All right, welcome to the daily market recap for Tuesday, September 23rd. And before you guys rush to the comments, I've already triple checked. The chart is correct. We actually had a red day in the market today. In today's video, we'll be going over the action of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. So, getting into the red day that we had in the market, started off strong. We'll start with the NASDAQ. Opened right near the high of the day, closed kind of lower, middle part of the range, still over the 5 day moving average. We did see a pickup in volume, but really, I don't think this is too much to worry about. This is the first time we have any evidence of profit taking of extended stocks starting to pull back. But if the indexes are over the 5 day moving average, it's really hard to be too bearish at this point. We basically have gone straight up since September 2nd after that gap down under the 50-day moving average got supported. So a little bit of chop here, even pulling into the 10-day moving average in the gap zone around 590 would be perfectly healthy in my eyes. S&P 500, similar red day, closed right at the 5 day moving average. Did so on less volume than 3 of the last 5 days. So it's nice to see lower volume in that consolidation over the 5 day moving average. Similarly, a pullback into the 10 day in the first support gap zone, 659 area, completely fine. Um, Even to the 20 day moving average, like we've just gone basically straight up. So consolidation, shakeout here wouldn't be the worst thing in the world. The growth stocks of the Russell 2000, that's the ticker IWO, made new 52-week highs, not all-time highs. Reversed, closed a little bit red, down 0.3%, but did have some relative strength compared to the other indexes. Some air to the 5 day moving average, and really no gap zones until like the 10 and the 20 day. ARKK, kind of a bearish engulfing candle if you look at just the body. Uh, Came under the 5 day moving average into that support gap, bounced right at that area. Very low volume on the pullback today. So again, I'm not too concerned overall. Down 1.3%. And then Bitcoin, or using IBIT as a way to track Bitcoin, we are seeing relative weakness out of Bitcoin, out of Ethereum, way more than the other index, way more than the indexes. So if we do see more follow through on crypto, which has been a risk on indicator in the past, that might be another signal that, hey, maybe this is a start of a deeper pullback. Let's either scale out of long positions, maybe take a couple shorts, um, or just kind of be more, not more patient, but more aware of where we are in the market cycle. Taking a look at the 9 liquid leaders, we'll sort it by price percent change today. OKLO continues to show great relative strength, up 1.7% today. We've had it yesterday where we kind of opened with a gap down, shook out, didn't even get to the 5 day moving average, but then closed well up 3.8%. Today, little gap down, shallower shakeout, stronger close compared to the daily range, and it is trading up after hours. This seems like the strongest stock in the market right now. There's a couple like OKLO, RGTI, IONQ, some like risk on type names that have been going straight up. And really until those close under the 5 day moving average, we are in a momentum market, and that's likely to continue. APP, new closing highs, higher lows today, still over the 5 day moving average. We did close weaker in the overall range, so we'll see if that squat is just a squat or if we do kind of follow through to the downside, losing the 5 day moving average tomorrow. TLS, a lot of wiki action here, but not following through to the downside, not following through to the upside. Had this nice pivot and did make higher highs and higher lows today, closed at a new all-time high. Um, Better in its daily range than the Nasdaq, than the S&P 500, so some relative strength there overall. But want to see this continue higher instead of like a false breakout failure here. Um, if that does happen, again, that's just feedback from the market saying, hey, momentum might be a little extended. We might need to reset here. So maybe it's time to pump the brakes on some new buys. NBIS, new all-time highs today, up 1.1%. I did switch this into the leaders list for Reddit, which closed under the 20-day moving average, under a support gap, which I'll just redraw that really quick. We had a support gap here. We closed under it. So because the close was below the low, we can eliminate it. And now this has two gap downs, lost the 20-day moving average on volume, and had like 3 days of high volatility right around the highs. I think it's fair to replace that with NBIS, which is making new all-time highs. Alibaba, not doing anything wrong. Liquid leader in China. Chinese stocks have started to pull back after making that breakout of their 3.5 year base that we'll cover in the industry ETF. And Alibaba is not pulling back at all. It's just consolidating over the 5-day moving average. It tried to get going today, but then with the general market weakness, kind of pulled in a bit. Still lower than average volume, close over the 5-day moving average. This is a setup that I'm watching. Google, similar type of chop, just over the 5-day moving average, declining volume as we consolidate, not doing anything wrong, very healthy action there. CRDO and ALAB had some pretty nasty wicks lower, where we had kind of midday selling pressure. Then by the end of the day, we rallied up, reclaimed yesterday's low, the 10-day moving average, and then closed well in the daily range. We have seen some volatility in some of these names the last 2 days, so something to keep an eye on. But one spot that I would watch is the 20-day moving average, $150, and the low of the gap zone here for CRDO as a potential undercut and reclaim entry. ALAB, third gap down in a row off the highs. Big wick lower, didn't quite test the 20-day moving average, got pretty close, did undercut that 220 range, then closed just under the 10-day moving average. Another spot to watch is that 20-day, the gap zone low, right around 215 as a potential undercut and reclaim. And then BE, this is probably one of the things that is giving me like the most caution, is because this has been in my mind the best stock in the market, off the lows in April from $15 up to 88. What is this? $86 yesterday. First time we've gotten a gap down, closed under the 5-day moving average on a big pickup in volume. Doesn't mean that this is like completely done. Maybe we consolidate here and then go higher, but a momentum name that has been in an acceleration phase of that uptrend, losing the 5-day moving average on higher than average volume is something to take note of. Getting into the industry ETFs, we'll sort it by price percent change today. And the first thing that really pops into my mind is XLE, the energy ETF, continues to show relative strength compared to some other stocks in the market or some other themes in the market. I love what it did recently, where we pulled back into the 20-day, we gapped down into the 50-day moving average and support gap. We undercut it by a couple cents. It was another higher low test of the 50-day. We had the first test on September 8th. This is a higher low test of the support gap and the 50-day. And then we gapped up the following day, opened on the low, reclaimed the 5, the 10, the 20-day moving averages. Did close kind of weaker in the range. Again, the market was just weak today. But maybe it's time to see rotation away from super high tech stocks into some oil and gas names. So the first one that comes to mind is PARR, which I should have bought right at the open today. That'll be on the long setup that we'll cover. But take some time and get familiar to the oil and gas names, because it does seem like we're starting to see some rotation there. ITA, aerospace and defense, another new all-time high today with a little gap up and strong close. MSOS, I added to my position today through the pivot here at 460. It did squat towards the end of the day and closed relatively weak. I still think that this overall looks fine, and I still have my position. But if we take out the low from September 19th, I'll get stopped out of that. XME, metal and mining, continues to make new all-time highs. Home builders, ITB, sitting on a support gap right at the 50-day moving average. The first test of the 50-day moving average after making new 52-week highs. Usually a good risk reward spot. And because we've had this like pretty aggressive sell-off, I don't think a lot of people are looking at home builders as a group to focus on. But at that 50-day moving average, you can manage your risk really tightly and see if we're going to get some support there or not. Gold miners, GDX, made a new all-time high and then closed red. Lots of space to the 5 day, plenty of space to the 10 day. This has gone basically vertical at this point. Semiconductors, higher highs, higher lows, closed basically flat on the day on a uptick in volume, getting a little extended in the short term, but really not doing anything wrong. Same with the nuclear and uranium theme, NLR. A lot of uranium stocks were extremely strong today. UUU, actually, we could just jump into them. UUUU up 7%, EU up 6.5%, UEC up 3%. And then the nuclear stocks like NNE up 2%, CCJ up 0.6, and then we already covered OKLO, which is doing well. Biotech ETF, a little bit of weakness today, down 0.5%, but on extremely light volume over the 5 day moving average. To me, that's not a sign for concern at all. This is just consolidating after making new 52-week highs yesterday. And a couple other groups to watch. FDN, this is the Internet ETF, lost the 5 and the 10 day moving average. IGVs over the 5 day, nothing wrong there. What was the other group that I wanted to cover? NLR, semiconductors. I'm blanking on it now. Um, Chinese equities, zooming out to the 3.5 year base, just pulling back into that breakout retest. So that would be right around $39. Right now we're at 40.6. Pull back to the 20 day is a spot that I'll be watching. I do have my final piece of CWeb that I'm trying to hold for a larger move. And if we get like a larger pullback into that 39, that breakout retest, that's a spot that I'm going to try to load the boat because when you break out of a 3.5 year base, it's usually not just for 1 or 2 weeks. Getting into the long setups, got 14 to cover. We'll go by average dollar volume, so most liquid to least liquid. First one is AVGO. We saw semiconductors, some of the kind of what's the right word for it? Like the initial leaders of the semiconductor space have been pulling back a little bit. AVGO is in that camp. And now we got a really nice risk reward spot. Undercut of the 20 day moving average, the HVC from earnings, and the support gap right at 335 area. Undercut and reclaim of that is the potential entry. And then the stop, I would just use a 2 or 3% stop there. Alibaba kind of covered this with the Chinese theme. Like we've seen the KWeb Internet ETF kind of pull back to the 10 day, maybe still going to pull back to the 20 day. While this is at the 5 day. So that's an indicator that this is the liquid leader that you want to focus on. Maybe it does have to pull back to the 10 day, but what I'll be watching for is an undercut and a reclaim of the lows of this like 5 day flag over the 5 day moving average. So undercut the low from September 18th, reclaim that would be kind of a more aggressive entry point. But I think China is a theme to focus on. I think this is like the stock in China to get exposure to. So I'll be trying that if we get a quick undercut. Netflix, really good consolidation. Started building the left side of the base kind of the beginning of July. From there, we've had a higher low September 15th. Now we have this nice pivot to work with. And whether you want to take this trade or not, I think it's one to set alerts for just to get market feedback to say, hey, here's a clean pivot on the right side of the base on a stock that has already gone through its consolidation phase. Are we going to break out of this pivot or are we going to uppercut and fail and just get a little bit more feedback from the market, whether this is still a risk on environment or if we're starting to see more signs that momentum is drying up? GEV, another kind of energy type name, just watching for a pullback into the HVC from earnings, the high volume close right around 629. Manage my risk against the 20 and the 50 day moving average at 619. Spotify, really good shakeout on earnings July 29th. And instead of following through to the downside, instead of accelerating down on bad news, it got bought right back up, which is a great sign overall for that individual stock. Whenever you see bad news getting bought up, it's a stock that you should have on your radar. Maybe you don't buy it right away, but that's usually a good sign for the stock. We've made higher highs, we've made higher lows, looking for another higher low as we pull back into the 20 day moving average, the gap zone low right around 707 as a potential entry there. And then you can manage your risk against the 200, or sorry, the 50 day moving average. That'd be about 1.5%. DoorDash is next. quick undercut of the 20-day moving average on what is this, September 17th, rallied up the next day, which is a good combination to see. Now just a higher low test of the 20-day moving average, lining up with a support gap zone at 257.60 is a potential entry. Stop for me would be 2 or 3%. I don't, I guess you could give it to the low of the pullback there if I'm doing the math correctly. If I'm not, do 2 or 3%. SATS, this kind of reminds me of MP, where it made a big move, pulled back, got tight. MP pulled back to the 50-day, so this might not be ready here for a pivot breakout. Another setup to set some alerts up top here at $75. Even if you don't trade it, you can use this as market feedback. But really, a pullback into the 20-day moving average and support gap zone around 67.40 is the spot that I'll be most interested in this. Next, we have rocket companies, which is kind of like a finance and like I think it's like more finance and home building kind of combined. So we've seen XLF, the finance ETF, have a little bit of volatility at highs, but overall relatively strong. Where home builders have pulled back to their 50-day moving average, kind of at a do or die spot. And RKT, not a name that you want to buy on strength. If you go through the chart, it's a name that you want to buy on weakness. So I'll be looking for an undercut of the gap zone, kind of a breakout retest here at, let's see, 1914-ish, 1916 as a potential entry there. The nice thing about entering under the 20-day moving average is anyone who has their stop like right around this area, which is most swing traders, especially if they like tried to buy the breakout and made new highs and now it's starting to fail, they're going to get stopped out. So it really skews the risk reward in your favor because you can keep such a tight stop on the undercut of this gap zone, like we did back here, that if it doesn't work out, you're out for 1%, 0.5%, something like that. But if it does, RKT is the type of stock that can make moves 4%, 7%, 5%, back to back to back, and really skew that risk reward, especially because home builders is right at the 50-day moving average, right at that do or die spot. So we'll keep an eye on RKT. Unity, I was kind of treating the pivot up top here as like a sign of risk on or risk off, momentum on, momentum off. Today we lost the 5 and the 10-day moving averages. Now just looking for a test of that support gap like we got on September 18th. This is kind of weird because it gapped down on I think it was, this. It was either a offering or it was downgraded. Let me look into that. But we gapped down either way, gapped down and immediately absorbed the that gap down. So we opened right near the low of the day, closed right near the high of the day, back over the 10 and the 5-day moving averages and the support gap. Got tight for a day, now pulled back, still on lower volume than the accumulation day that we got on September 18th. So just a pullback into that 43.50 spot, that support gap low, 20-day EMA as a potential entry. Elf Beauty already uppercut and failed at the resistance gap up top. This is a name that the 200-day is just starting to trend up. So whenever I see a stock like that, I don't tend to buy on strength. I tend to buy on a shakeout or a weakness. So instead of like the 20-day moving average here, I want to give it a little bit longer to like the support gap low at 130.40, just because we have seen some like retail a little bit more like weak as of late. So I might miss it. Maybe it bounces at the 20-day and I just miss the setup. But because we like have an extended market, because some retail names have been weak very recently, I want to see everyone get shaken out before I try that trade. And also zooming back, this is just a like a breakout retest at 130.50 at a support gap zone below a key moving average. Good recipe for strong risk reward for the trade. Coles, up 2% today, is a name that I've been kind of focused on lately. Still don't have a position in it, but watching a pullback, a higher low into that HVC, the high volume close from earnings, and the 20-day moving average right after tomorrow, they'll be right on top of each other, and then manage my risk 2 or 3% there. AAOI, another kind of high powered name. It has the ability to make very strong, very quick moves from 6 up to 44 that has a 200-day that is in a downtrend. So I don't want to buy on strength. I want to buy on weakness. And we've seen a lot of volatility here. We've seen an uppercut and fail of a resistance gap, distribution day to day, pickup in volume, close under the 5 and the 10-day moving averages. Now, let's see if we follow through in the morning, undercut and reclaim the support gap low and the 20-day moving average right at $27. Then the stop would be the low of like the previous day here. AMSC, looking for a pullback in the HVC and the 20-day EMA. Don't want to buy it extended. And last, we have PARR. This is the only setup today that I'm kind of kicking myself, not for buying, because I talked about it with Ariel last night, and I was like, this is a perfect setup. It's just not like a momentum name, so we're in a momentum market. Why should we trade it? And gap up, open on the low, immediately goes for 5.5%, 5.7%. Now just waiting for a pullback into that 10-day moving average and gap zone as a breakout retest entry point. Next, we've got 10 short setups to cover. The first is MSTR. We've seen the Bitcoin weakness. This has been weak since July, mid-July, losing the 50-day moving average July 29th, losing the 200-day moving average July 19th. We did get a undercut and reclaim of a support gap on September 4th. So at that point, the move down was probably a little exhausted. We got a lot of chop. And then just one big day, what was this, up 5.5%, all the way up through the 200-day moving average and the resistance gap. If you look at like 5-minute chart, 1-minute chart, almost to the penny, we uppercut and fail at the resistance gap, lose the 20-day EMA. The next day, lower high, don't even get to the 200-day. Follow that with a gap down. Then today, don't even get to the 20-day EMA before weakness comes in. We close on the low of the day, below yesterday's low, into the support gap here. So a little gap up, like morning strength, and then a loss of the daily VWAP would be my entry. Well, my ad, I already have a short in this with MSTZ. And then I manage my risk against today's high. But if momentum is going to get sucked out of the market, and we've already seen Bitcoin showing some relative weakness, this is under the 200-day and looks like this could be just starting to enter its stage 4 decline. And after a monster stage 2 uptrend, like from $13 up to $460, we can see a long unwind of the stock if we do go through like a true correction. Next, we have Royal Caribbean, a name that was on the leaders list, has been like a monster stock basically since the low of 2022. Kind of bottom before the market, actually, now that I'm looking at it, but 10x off the bottom. Recently, we had a loss of the 20-day, loss of the 50-day, and then we just ripped higher. But we only got to new highs for 2 days, really, before some like counter trend action started. We got a gap down that we uppercut and failed at, turning it into a resistance gap. We lost the 10-day moving average, the 5 and the 10-day on September 9th. We test the 50-day, bounce up, good combination of price action. But what you don't want to see after a shakeout and then strong action is a gap down, unfilled gap down in a reversal, which is exactly what we got on September 12th. The next day, we lose the 50-day moving average, we extend further, and now we've had this kind of volatile on a daily price chart, kind of rally back up to the 20 and the 50-day moving averages. Today, we uppercut and failed at both of those levels. Now, just looking for follow through today's low as the short, stop at the 50-day moving average. ARM, one of the weaker semiconductor names, rallied up into the resistance gap here, quickly gapped down on September 18th, then followed by another gap down under the 50 and the 20-day moving average on the 19th. A little bit of strength yesterday. Tried to rally this morning, got back into that resistance gap, and then reversed, closed right near the low of the day, eating into this support gap. I do want to buy or short this on strength versus weakness, just because semiconductors as a whole is so strong. We'll wait for a better risk reward spot to see a rally back to the 50-day moving average to that 145 spot. And then we can manage our risk with a stop over the resistance gap right around 147. LITE, this name has been a monster this year from 46 up to 173, so about a 300% gain. Starting to lose momentum up here. Today we had a tight day, low volume day, close under the 5-day moving average. If you want to say that this is the long setup through today's high, I wouldn't argue. From contraction comes expansion in one direction or the other. Um, but I've seen a couple of these setups where you lose momentum, then you get a tight day like this, and then the bottom just falls out. So through the 10-day moving average or today's low would be the entry. Stop would be at today's high if you're shorting this. QUBT, we've seen the quantum names just go absolutely nuts. RGTI, probably the leader. RGTI, IONQ, massive moves, 100% moves. QBTS, really, really strong action. And then there's QUBT, which has always been kind of a laggard in that group. Did a secondary offering, had a big gap down on the 22nd, down 13%. Some good strength today, up 6%. But you can see we closed lower in the daily range than like an RGTI, than an IONQ. So if those names that are extended are going to go through some meaningful pullbacks, which at some point they will, this would be the name that I would try to target for a short, not the high flyers that are the leaders in the group. I want to kind of look at the laggards. So something like a QUBT, or even like I didn't have this on the list, but a QMCO, which is literally not a quantum name, even though their name is Quantum Corporation. Big 40% move on Friday. Weakness yesterday, weakness today. On some still pretty large volume for that name. It's just a little bit thinner than QUBT, so I went with QUBT for this video. Would just look for a like a morning pop with the rest of the quantum names, then a loss of the daily VWAP as the entry. If the high of the day is lower than today's high, then today's high would be the stop. Otherwise, just manage your risk with like a 3 or 4% stop on that. GSAT, double high tight flag, really good chart to study on the way up. Then we had this really like ugly reversal, gapped up into new highs, opened on the high of the day, undercut the 20-day, closed above it. Two tight days right at that 20-day moving average. So you would expect expansion from there. And this morning we were expanding to the upside, but by the end of the day, we closed right near the low of the day, back under the 20-day moving average. So now just looking for follow through today's low as a potential entry. Stop would be the 5-day moving average on that one. NEGG, probably the name I'm most looking to short tomorrow. Already made its move from, what was this, $3 up to $130. The momentum has already popped on this name. So it went from 3 to 130, then all the way down back to $30. Now we're just seeing a lower high as this name gets completely forgotten. Rallied back up to the 50-day moving average, uppercut and failed that again yesterday and reversed, ending the day down 20%. Super tight price action today, up just 2%. Through today's low is the entry. Stop at today's high is the stop. MMYT, kind of going with that RTL theme, like just traveling. This stock, big stage two uptrend, big stage three top. You now have the 200-day in a downtrend that we continue to see sellers taking profit or just getting out for break even at, back in July, back in August, and most recently yesterday. We uppercut and failed another resistance gap, another lower high below the declining 200-day EMA was the close. And then what you don't want to see if you're long after like a failure to close over a key moving average is it a gap down? And that's exactly what we got. We opened with a gap down, opened on the high of the day, closed right on the low of the day, back under the 5, the 10, the 20, and the 50-day moving averages all in a row. So any like morning rally up to the 50-day, right around $98 would be the short for me. And then my stop would be over $100. It is a lower ADR name, so you either have to size up, use options. If you trade options, I don't trade options. But this is a name that it looks like it's just getting started to drop into the stage four decline. So slower moving name, just like SFM was for us, where we were like, all right, this name's like stage two uptrend, stage three top, stage four decline. And it just took like a while for it to start to unwind. But eventually, like when stocks top and then start stage four, they tend to unwind big time. SEZL, big gap down on earnings on August 8th, August 8th, down 34%. Sideways action while the market ripped higher. Today, the first day there was any loss of momentum, any weakness in the market, and this was down 6.7%, losing all the key moving averages. Any morning pop up to like the 5 and the 10-day moving average around 89.20. That would be a potential short versus the high of the last 3 days, right at $93. And then ZEPP, I still think this is either a long or a short setup. We've consolidated since September 3rd. So all of September, we've consolidated, letting that 20-day EMA catch up. Not something that I want to short on strength because it's shown the ability to make incredible moves to the upside from $2 to 14, then 14 up to 52. So don't want to short it on strength. I want to short it on weakness. If you take a look at the NEGG chart or the open chart, shorting got a lot easier when you took out the low of the structure. So we had this like one wick day where we came under the 20 and then immediately reacted, but a loss of like $45 would probably get this to roll over. So that's the spot that I'm watching. If you want to say this is a long through today's high or yesterday's high, I wouldn't argue with that, especially if the momentum continues in the market. But I just think that this name's probably closer to being ready to short than go long. So that's going to be the daily recap for Tuesday, September 23rd. Hopefully you guys enjoyed the video. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the market open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.